Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at exactly what's happened over the weekend in terms of the Bitcoin price crashing. We'll also have a look at the wider markets to see exactly how Bitcoin fits in and where the 60-day cycle is going to be going over the coming days and weeks. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to start off with the elephant in the room, and that is what happened on Saturday when the market for Bitcoin fell by nearly 10%. So this is the 1 hour chart here. And as you can see, UK time, 8 o'clock, the market fell from around about 67,300 all the way down to 60,800. So that was just under a 10% fall within 2 hours. And we can also see very clearly in the charts, once we had actually bounced from this point here at 60,800, the market has been mostly sideways and up. So the current price as I speak is 66,360. And a lot of people are talking about the market falling. Well, let's just have a look at the evidence in the charts of exactly what's happened in the past of something similar geopolitically happening. But before I do that, I'm going to go to the daily chart and show you on the daily chart exactly what happened on that day. That was on Saturday. So the full day's candle was down from 69,000 all the way down to 60,800. So there was a 12% decline in Bitcoin in one day. Even for Bitcoin, that's quite a large movement for one day. And something similar happened back on the 24th of February in 2022. And that will give us a clue as to where the market may well be heading over the next few weeks and months. And that was the date on the 24th of February. As it says quite clearly here, Russia invaded Ukraine in an escalation of the Russo-Ukrainian war. And that is this green candle here. So just by looking at a similar event, what happened, and the effects it had on the Bitcoin price, we can ascertain with some degree of probability of what may follow afterwards. So as expected, just like what happened on Saturday, we can see the top and the bottom of that candle. So from around about 39,700, the Bitcoin price fell all the way down to around 34,300. And that was a 13% fall on one day. So what happened on Saturday of around 10% fall is still much less than what happened on the 24th of February in 2022. And we can see the repercussions afterwards of the price. Once we'd bottomed out here, just like what happened on Saturday, the market started to rise. And obviously the difference here is that in 2022, we were in this brutal bear market all the way down to 15,000. And this is the candle around the 24th of February on the weekly chart of exactly what happened then. So we were in the middle of this bear market here. But currently, we're in the middle of a bull market. And if in a bear market, the market went up immediately after the 24th of February, then we can safely say that unless there are other issues around the geopolitical situation, there's nothing really to worry about, and we should just treat it as the normal ups and downs of the market. Judging by some of the comments in the comment section, you would think that most people just think that the market just goes up. But those people who know what the reality is, yes, the market goes up and then it comes back down. It goes up, it goes down, it goes up, it goes down. And this happens regularly throughout the bull markets as well as the bear market. So we can expect these normal ups and downs, the ebb and flow of the market. And the reason why I mention that is that in the last video that I did, and that was only on Thursday, and the title of that video was that this is the 100% accurate chart predicting 140,000 Bitcoin in 2 months. So a lot of people mentioning in the comments about what happened on Saturday. I can only give you my opinion, and that is that nothing has changed. This is the normal ups and downs of the markets and the types of things that are going on the geopolitical scene, as well as the economies of the world, etc., etc. All these things are just excuses for the price to go up or down in the normal ups and downs of the market. Our focus should always be exactly where we're going, and that is towards the end of the bull market, which we're expecting between 6 and 12 months from now. So the bottom line is there are no dramas, there's no emotions, just a clinical view of the charts. And I would urge everybody just to keep this in mind here. We're at the edge of breaking the previous all-time high. And as I mentioned in the last video regarding the first 2 months after breaking the previous all-time high, just like over here, the first 2 months here and the first 2 months here, and the first 2 months here. The narrative from the last video of the 100% accurate picture, i.e. the first cycle, the second cycle and the third cycle. So by a process of extrapolation, we should expect the price to go at least 100% between where we were at the break of this all-time high, i.e. at about 70,000. Nothing has changed for me for the next 2 months for it to go to 140,000. And if it doesn't go to 140,000, then what we then have for the next cycle is that when we look back, we'll look at these 4 cycles and say for 3 cycles, the price for Bitcoin went up by more than 100% in 3 of the cycles. And in 1 of the cycles here, it didn't go up. So we've got a 75% probability. Always remember, these markets are to do with probabilities. There is nothing called guarantees and there is nothing called certainties. Guarantees and certainties don't occur in the market. You can only go by the historical perspective of what's happened in the charts. At the moment, we have 3 cycles, and 3 out of 3, we've had the price doubling after breaking the previous all-time high. And for that time period, we still have 6 more weeks to go. So just because we've got a little bit of a downturn for a few days after that video, it doesn't mean that the charts are wrong. It just means that these cycles haven't played out yet because we haven't got to the end of May. The March candle closed above the all-time high, so which means that from that date onwards, i.e. April is the first month, May is the second month, for those who may not be aware of that. So at the end of May, when we get the May candle, let's see where we are with that. And if it's not at 140,000, then we can say that 3 out of 4 cycles behaved in one way and the 4th cycle behaved in a different way. And we'll take that as a learning for the 5th cycle, which will be the next 4-year cycle. So please always take an emotionally intelligent view of the markets. Nobody is trying to be right or wrong. We're here to make money by eliciting information based on the charts. And what we elicit, we try and extrapolate that to see where the market will be going in the future. Okay, before I move on to the wider markets, I'm going to have a look at exactly what's happening this week. This is an exciting week because what we've got is the Hong Kong ETFs are about to start either today or sometime this week. Certainly they're very keen to get on board Bitcoin before the halving at the end of this week. And you can see in the news that the mega whales, i.e. the ones with over 10,000 Bitcoin, are accumulating as much Bitcoin as they possibly can ahead of this Hong Kong's approval of the first spot Bitcoin ETFs. And the other thing to note is the amount of money that could quite easily enter the Bitcoin arena with the Hong Kong listed Bitcoin ETFs. And we're talking about unlocking up to about $25 billion in demand. That would certainly put a rocket under the Bitcoin price. So the question is, could this be the catalyst that could propel the Bitcoin price to 140,000 in the next 2 months? Only time will tell, but we'll certainly keep a focus on this over the next few months. And if we have a look at the liquidations heat map here, Bitcoin has a habit of taking out as much of the leverage positions as you can see with these bars. So once again, the Bitcoin price coming back down to 60,000 has taken out all the leverage players here. But one thing to note, at the top end here with these yellow bars, as you can see, these are also the stops for the shorts, just below the 72,000. Every time we have a huge amount of leverage players, then the market will come back down and take them out. So it really doesn't pay to do the leverage trades on Bitcoin. And if we have a look at the Bitcoin ETF tracker, we can see that Grayscale now only has 320,000 Bitcoins left, having started on the 11th of January at 620. So they've lost 300,000, and that bleed is the one that's really been holding the Bitcoin price back. But as you can see just below them, BlackRock and Fidelity, just the 2 of the ETFs have actually more than surpassed the amount of the 320,000 Grayscale has left now. So it's only a matter of time. Bitcoin bleeding from the Grayscale comes to a halt somewhere down the line. Okay, so before we go into the Bitcoin analysis, let's have a look at the wider markets to see exactly what's happening there, to see what influences there may well be for the Bitcoin price. So if we have a look at the 60-day cycle for the SPX on the daily chart, and despite the geopolitical situation in the Middle East, SPX was already pointing downwards into the 60-day cycle low here. And as you can see, we've gone actually below that, so that would be a failed cycle. But I suspect that this may well not have been the start of the new cycle to go back up again. So we may need to adjust this cycle and wait for the end of this downturn before using that as a reference point for the end of the cycle and the beginning of a new one. So let's just wait for this correction to come. And the question really is, how far low can it get? So let's move this out of the way first. So the red line is still the 60 days, and obviously the cycle can continue into well past the 60 days, and we'll end up putting that as the marker for the end of the cycle. So currently, as we can see with the SPX, and we noticed this turnaround with this double top here, and we expected the SPX to come back down, and we thought that this big red candle was going to be the end of that cycle bottom, but obviously it's now come back below that, so we can adjust that a little bit later. So this is the levels to look out for, exactly 50,000 here at this point. But if we look on the weekly chart, we can see that the real big level goes back all the way to here, around about the December 2021 at the end of the bull market. So what we've done is we've made a higher high from that point, and as long as we don't lose this level here, then we're still good to go. Come back down here, make a new cycle, and off we go. And if you take a measure of this, it's not really too much of an ask for the price to come back down for the SPX to the 4800. That would only represent around about an 8% to 10% to the bottom of this range. Considering that we've gone up from bottom here to the top there, 30% to give up around about 8 to 10% is very much within the ups and downs of the market, as you've seen here. So when we went from this point to that point there, that was a 21% increase, and that still gave up 10% here. And since then, we've had another 28% rise. So the charts are telling us that even if the price came down for the SPX back down to 4,800, it's still within the realms of acceptability for the market's normal ebb and flow. And also, since this point, we're now 5 months in here, around about 24 bars. So it's about 5 months, and it just feels natural for us to have some sort of a correction. So for me, nothing to worry about looking at the SPX. And if we move on to gold, we can see on the monthly chart here, gold is looking incredibly bullish at the moment, with follow through from the breaking of this neckline over here. So all looking good on the monthly chart, very bullish. Certainly in the next 6 to 12 months, we're seeing a big bull run for gold here. A little bit of a concern on the weekly chart. We can see that the market closed yesterday with this shooting star, gravestone doji, whatever you want to call it. Basically, it's a long wick at the top with a small body, and that is a rejection of higher prices. So we may well get a little bit of consolidation here for a few weeks, and we could even come back down and retest these levels, and that would be incredibly healthy for gold for a much more impactful bull market run over the next 6 to 12 months. So let's see what happens here. But certainly a period of consolidation would not go amiss at this point, judging by this candle here. So it certainly looks like a bit of a topping out feel about gold here. And if you look at the RSI, we are quite well overbought at this point. So a period of reflection, a period of consolidation, and a period of a little bit of sideways and down movement could well do the trick to reset these indicators down here. And if we go on to the daily chart, quite clearly there is a bearish divergence going on. So you can see with the gold price, we've gone to a very much a higher high at this point, but on the RSI we can see that we are on a lower high here. So there is bearish divergence which needs to be playing out here, and the stochastic RSI is pointing downwards. So we may well have a period of consolidation while these set down here and start moving to the upside. And moving on to silver, as mentioned over the last many videos, we can expect for silver to come back and find resistance at this point based on what's happened previously over here and all along here. And right on the button, it's done exactly that. So when you look at the RSI and the stochastic RSI, so on the monthly chart, we're getting a certain amount of divergence while the price is going sideways here. So a little bit of divergence actually developing on the monthly chart for silver. Just like gold, we've got a long wick at the top here. So there's a rejection of higher prices. So once again, a period of consolidation, maybe even coming back to retest this level here at 26, may well do the trick for a move back to the upside. So both gold and silver looking incredibly bullish for the next 6 to 12 months. And moving on to the dollar, it's now broken the upper limit of this trend line here. So we've now got a breakout. The expectation was that at this neckline over here, that would have been the extent of the actual bullish rally for the dollar. And certainly this candle here, this red spinning top here, which is usually associated with a reversal, this is what I was expecting, but certainly dollar's been showing a lot more strength than one would have expected. So what we can see from now here is that the next level for the dollar is going to be in this region here of around about 106 to 107. I think anything higher than that would be really quite unexpected. So let's see where the dollar goes. And as the dollar goes up, obviously it's going to affect the wider markets and suck the liquidity out of those markets. So for the variety of those reasons, what we can expect is that the uncertain sentiment around the world is driving the dollar to higher levels. So we can really expect the weakness in the equity markets over the coming days and weeks. But the question is, will it affect Bitcoin Bitcoin as well? Well, my interpretation is this, that we did make a day 57 cycle low over here. And from the top of that, we went above that level, creating a higher high. And now, having created an even higher high from this point, we're now coming back and retesting the bottom of that. So far of the 60-day cycle is still intact as far as I can see with Bitcoin. And we've had an early midpoint fall into the cycle here. And as long as we don't break this point, we won't have a failed cycle. And as I showed you earlier, I'm expecting the price to rise now rather than to fall from this low point of the 60,000. And only time will tell whether we have a failed cycle or go back up and create a right translated cycle somewhere along here for a higher high. And then what we can do is make our way towards the end of the 60-day cycle before we have a 60-day cycle for the start of the following cycle. So let's see where this goes. Certainly a lot of interesting developments going on with the Bitcoin price. And if you want to look at the probabilities, then if we do break this point here, then the next strong level would be this point here, around about the 52,000. And as long as we don't break the 52,000, this bull market rally that we've had is still within the normal ebb and flow of the current bull market that we expect to run for at least another 6 to 12 months. So this is nothing unusual for Bitcoin to do this. After all, this would only be from the top there to the 52,000 of around about a 27% fall. And we know from history with Bitcoin, in previous bull markets, we've had 30, 40 and even 50% falls. So nothing to worry about. We've still got to take a very clinical view and not get shaken out by the movements of the price. And certainly the way I'm looking at these things is that this is a classical maneuver by Bitcoin and the wider markets. This is what they do when they want to shake out the weak hands. And I want to bring your attention to this particular quotation from Warren Buffett, because this is exactly what's going to be happening today and this week. Because of what's happened over the weekend, those with an emotional disposition, which the market calls weak hands, they will be frightened of the situation and getting rid of their Bitcoin, their altcoins and their Bitcoin miners. We can see it all coming a mile off. And you can see the institutions rubbing their hands with glee, knowing exactly what's going to happen, and they'll be there to pick up all the altcoins, the Bitcoin, as well as the Bitcoin miners. And as Warren Buffett has alluded to, the stock market is a device for transferring money from the impatient to the patient. And this is no wonder that only 5% of the normal investors like you and I, only 5% are going to actually make it to the end of this bull market. The majority will be having narratives played in their minds regarding the geopolitical situation, regarding the interest rates, regarding the economy, regarding the recession, etc., etc. Those with an emotional disposition will be having those narratives played out, and that contributes very heavily to being shaken out by the market. And this has been going on for only about 250 years. And it's very obvious to identify those people who are going to be part of the 95% of the investors who are going to lose out in this bull market. And one thing that's a very strong correlation of negative comments is basically when the market starts to go down. And as we've seen over the last week or so, with the price of Bitcoin falling a little bit, all of a sudden the comments start to reflect that. And as a point of learning for everybody, I want to refer everybody to this particular point, that the most successful traders have a never give up attitude, and the most painful part of trading is a losing streak, i.e. when the market is going down. Even for the most successful trader, this is the case, because even successful traders who've been there for 10, 20, 30, 40 years, even they get shaken out. Whenever the market goes down, unfortunately, that's how the emotions are. And what we have to do is we have to accept that pitfall as inevitable. And a good trader takes them as an opportunity to learn from, rather than to actually offload their Bitcoins or altcoins or the Bitcoin miners. So certainly something to learn from. So in a nutshell, if you can understand this one point itself will make you very rich. That in a bull market trend like this, these little maneuvers are there for the market to shake the normal investors out of their positions and for their institutional friends to get back on board at lower prices. These are the opportunities they're looking for. They're very happy to pick these up at these points at the same time as the normal ordinary investor who doesn't know how these markets work. They're offloading at these exact points while the institutions are picking them up. And this is a classical marketing maneuver for the rich to keep getting richer and the impatient hands who can't handle the emotions of markets, who only have themselves to blame. So please try and get your emotion out of the market. So all I would urge everybody here as a point of learning is to take the emotion out of the market and to always keep a neutral, fluid and flexible approach. Look at these dips down here as opportunities to buy. And the reason why I mention that is that if you look at the Bitcoin miners, currently we are having a wonderful opportunity as I can see it. What we're having is an incredible opportunity to buy some of these Bitcoin miners at 50 and 60% discounts. But if you read the comments about the Bitcoin miners in many of the YouTube channels that cover the Bitcoin miners, you would think that they are all going out of business. And once again, we have people offloading their Bitcoin mining company shares at these points only for the institutions to pick them up very happily at these points here. And this is what we should be doing. So for me, I see this as a great opportunity, and certainly for me, I'm picking up as much of the Bitcoin miners as possible. And we can see with Marathon Digital Holdings, one of the biggest miners in the Bitcoin mining industry, it's fallen from about $34 to the current price today. In the pre-market, it's at $16.10. So that's a 53% discount. But what will actually be happening will be that people will be offloading their shares here, thinking they're going to go much further. But obviously, the institutions will come in and they'll get this ride back up here to around about $45 to $50. And as you can see, just by the charts, it's telling you a story. For every up, there is a down, but the next up is higher than the previous high over here. Then we have a down, then we have a higher high from the previous high. Then we have another down, but the next high is actually higher than the previous high. And so on, it goes on. So next high will be higher than the previous high with a higher degree of probability. If you can't see that, you're in the wrong market. And if we move the chart to the left a little bit, we can see quite clearly where this is going. And I always have to say to people, nobody has a crystal ball, but what we can do is to elicit information from the patterns in the charts, the historical perspective, and see exactly where we can extrapolate the chart in the future. And this is where, this red line, where we're expecting the Bitcoin cycle to end, anywhere from where we are currently here to anywhere on this journey to where this is going to be. So the current price for Marathon is around about the $16, but it isn't out of the realms of possibility and probability that it could quite easily go well past this trend line here, and the trend line ends at around about $100, but there's another trend line at around about 150, 160, and who knows, it could go much further than that. So there is a great opportunity with the Bitcoin miners that I can see, and what the halving is doing is providing an incredible opportunity to get on board for the final time with this Bitcoin market cycle. And all I can say is refer you to what happened in the past after the halving here, this white line. This is what happened with Marathon, and this is what I would be expecting for it to happen here in the next 6 to 12 months, maybe even 24 months if the market is extended. And certainly this is where the halving is the trigger for the prices to go higher. But we only have one data point. And as long as you can stomach these big falls of 60% sometimes over the course of the next 6 to 12 months, if you can stomach these, then this is an opportunity made for you. But if you can't stomach these, if you don't like the volatility, then this opportunity may be too much for most people. But if you do want to join us, below every one of my videos is a join button for the private Bitcoin Miners Members Club that we run here at Wisdom Bites. And for the price of a coffee per week, you can join us with all the videos, all the updates, all the news and articles about the Bitcoin miners to keep you up to date from where we are to the end of the bull market. And now it's time for our favorite section of the video. Yes, you've guessed it, it's the Bexit Countdown, where we look at one of the indicators to tell us exactly where we are in this current cycle and whether we've topped out or not. And today I'm going to look at two particular indicators. And this is the first one here, the Bitcoin top cap. And as we can see that each of the previous peaks over here and here, the first three peaks of the first cycle, as well as the 2017 cycle, but bypassing the 2021 cycle, but this is where we are currently. So we would expect with a higher degree of probability that based on these 5 previous peaks, we have 4 peaks that came and hit the blue line. So with a higher degree of probability, maybe 70, 75%, the current price where we are should come back at the top of the cycle at the end of the bull market to hit this blue line here. And currently we can see quite clearly we're nowhere near that. So this is one of our measures for the end of the bull market. And the second one is this Puel multiple. And as we can see, the green zones here is the buying opportunities. And I remember at this point here at the end of 2022 showing this green zone, saying that this is the buying opportunity. Obviously when the price is in this green zone, everybody's expecting this to happen and they don't get on board. It's only when they get up to this point where they become convinced and have to buy up at a higher price. But we can see quite clearly the red zone is where it's going to top out from the previous historical perspective here. Yes, it is a declining trend line here. So we have to keep an eye on this. And remember, this is only one of many indicators. So when we have a confluence of a few indicators, then we'll be able to judge whether this is going to come up to the red line. But just because the previous one didn't go well into it, doesn't mean that this won't. So as we've seen with the top cap, we're quite a way out of the top of the bull market. So every week we'll have a look at each of the different indicators to tell us exactly where we are until we get to a point where we have a confluence of 3 or 4 or 5 indicators telling us the same thing. And then we have to play the probability game that with a higher degree of probability, that is the time to get out. Nobody has a crystal ball. All we can do is elicit information from the charts that we have. And so far the charts are telling us that we have actually not topped out yet. And we're only breaking up above the previous all-time high at these levels around the 70,000. So a long way to go. This is the journey. We want to capture the whole of this move. So far we've captured this move here. If you've been following my videos, we got in right at the bottom. We've captured half of the move, got the next half to go. And it's the same as capturing this move at this point here in the last cycle, and this one in the previous cycle, and this one in the previous cycle to that. So this is what we're here for. This is where we've got to keep our focus. Ignore the geopolitical situations, ignore the economies, ignore the interest rates, ignore the inflation. Keep your focus on the charts. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and to turn on the notification bell. If you've got any comments, questions, or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.